Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, we're going to have a look at Bitcoin as per usual, the short term and the long term, but also the exit indicators, because we're now coming to the end of the cycle with Bitcoin. We're only a mere few months away from the top of the cycle, and we need to be prepared well in advance. And in today's altcoin section, it's going to be XRP. And I'll also cover the Bitcoin miner, Marathon Digital Holdings as well. And in today's Wisdom Bites section at the end, we're going to be covering the incredible story of the two frogs. It's an incredibly inspiring story, so please make sure you listen to that. You'll never look at frogs in the same light ever again, I promise you. Okay, so if that sounds interesting, then without further ado, sit yourselves down, eyes on the screen, and let's get cracking. Before I do, a polite reminder that everything in this video is for educational purposes only. Nothing in this video should be taken as financial advice. Please do your wider research before making any investment decisions. So today I'm going to start off with the monthly chart, and I'm going to have a look at the various cycles. Now we're on the third cycle since 2010. So the first cycle ended at the end of 2013 here. The second cycle ended at the end of 2017 here. And we're going to see where this cycle is going to end currently. But the interesting thing we need to note here is this. These are 4-year cycles, and I've mentioned this many times in the previous couple of years. So from the inception low here in 2010, it took us approximately 3 years. So this was in October 2010, the low, when it started off, and it took us exactly 3 years to get to the peak there. The next low in the second cycle here was here back in January 2015, and it took us exactly 3 years to December 2017 to get to the peak here in December 2017. And the low that we got here back in December 2018, when we reached the price of around about 3,100, would suggest that we're going to be peaking around about the end of 2021. So December 21, January 22, around these levels here. So that would suggest that we're only 4 or 5 months away from the peak here. So we need to get ourselves ready for the blow off top here. The reason why we call this the 4-year cycles is because from the bottom of this first inception here to the bottom of the first cycle here was exactly 4 years. From the bottom here to the bottom in 2018 was exactly 4 years. Well, we've only got 2 points. Since that's all we've got, we have to assume through a process of deduction that since that's the only data we've got, then we just have to deduce that on a balance of probabilities that it will be around about 4 years from this point here, December 2018 to December 22, when we get to the next low. So before then, obviously, we need to have a peak around here. So that, again, that would suggest that we're about to have a blow off top in the next maybe 3 to 6 months time. The other interesting thing about this chart is that when we had the peak and broke that, it took us approximately 1, 2, 3, 4, 5, 6, 7, 8, 9 months to reach the next peak. So once we broke the previous peak, like here, it took us 9 months to get to the next peak. Similarly, in the second cycle, when we broke that peak there, it took us 1, 2, 3, 4, 5, 6, 7, 8, 9 months again to get to the next peak. Now, this current cycle isn't similar in that sense, because if you look that once we broke the 2017 December peak here, we've already had 1, 2, 3, 4, 5, 6, 7, 8. We're on the 9th month now in August. And obviously we haven't had our peak yet. So it may well be that we've got an extended cycle here. Obviously that's not rocket science. However, the information we need to deduce from these bits of historical context is that we must be getting very close to a blow off top here. So while we're on the 9th month, it may well be that we're only maybe 3 or 4 months away. And certainly I'm expecting a massive rise in the next few months. And maybe that will conclude with a big massive blow off top. But certainly we need to be focused and prepared for that. And the way to prepare that will be to look at the exit indicators of it's okay to get up to those levels, but how do you get out? It's not as easy as you might think. The issue we've got currently here is that we've had an extended correction here. And it's not surprising that we've had an extended correction in the last 4 months, because it was unprecedented, the rise that we had. We had 1, 2, 3, 4, 5, 6 large, strong candles that took us far, far higher than anticipated, especially in the time frame that we did. A bit similar to the first cycle here. Look at the monthly candles. It's basically going straight up, but unfortunately what goes straight up is usually followed by this, a massive correction to the downside. This was, I think, a 70% correction. This one here, the current one, we've had a 53% correction. If we'll have a look at the RSI, we can see quite clearly where the peaks are. So we got our first peak there. Then we got our second peak here. Obviously, we got another peak there. This was a 2-peak cycle here. And then we got another 2 peaks here. One there and one at the actual blow off top here. And currently, we've had our 1 peak in April. And look at this. Where are we heading with the RSI? Quite clearly on the monthly chart, we're in very bullish territory coming up now. This could very well push us into this peak around here. Again, that would take us in the next 4 to 6 months to a blow off top here. So this is the monthly picture, the overall bigger picture that we have to keep in mind if we are to make some sensible, rational, objective decisions at the end of this bull market. Otherwise, we may well get left behind. And if we have a look at the weekly chart here, we can quite clearly see when we zoom out like this, that we found support along this line here. And I've been saying for many videos now that I believe this is the bottom here. And the possibility is, yes, we can fall down, but this looks like a bottoming out pattern. And that now has been confirmed in my eyes by these series of weekly candles that we've got here. If we zoom into this, we can see quite clearly that we've got 1, 2, 3, 4, and we're on our 5th weekly green candle. It's not just any green candles. These are very large green candles, which are a classic bottoming out reversal pattern. So we've bottomed out from here, and these green candles, for me anyway, confirm that. So now the chances of us going back to this support line anytime soon is fading very, very fast. There are some people who are still holding on to a large amounts of cash, expecting this to go down here and even further down, and to buy down on these levels at 20,000 and lower. Whilst that is always possible, the charts would suggest that they would be left disappointed. And the test that we always have to come across is this one, that if you're a holder, are you sleeping more comfortably at night knowing that you're fully invested than somebody who's holding the cash? And I would suggest that people who are holding the cash are now very nervous at this point. So it may well be that those holding the cash may wish to invest now before the market moves further up and have to buy back at a higher price. The charts would suggest that it would be more sensible to be a holder at these levels with the chart patterns developing as they are. And if we have a look at the RSI, we can see quite clearly that the bearish divergence that we got here, a higher high on the price, a lower high on the RSI, looks to be having played out down here. And we're currently heading towards the top of this, the 70 mark. So we've had our peak here. It looks like we're on our way in the next few months to make a second peak, and possibly and probably the blow off top that we've been anticipating. And the question is, how do we get out at the top here? So we're going to have a look at a few of the exit indicators that we haven't had a look at for a while. Okay, the first indicator I've got to show you is the pi cycle. And I've shown you this many times before, but it really does help to actually keep looking at this and refocusing on this, because we're going to be getting a very good signal as to when to exit the market in a few months' time. As we can see, the first peak in the cycle was when the orange line here crossed above the green line. And we got this first peak here. The next peak, again, the orange line crossed the green line there, and we got our second peak. Whenever we get these main peaks, we get the orange line crossing the green line, and we get a peak at that point. And currently, we are here. So if we just zoom in on this part here, we can see quite clearly that as this orange line was approaching the green line to cross it over here, we were mentioning it, but nobody believed that this was going to be a peak, including myself, because we thought this is too early and this didn't seem like a blow off top. And I think everybody missed this peak. But again, what we have to learn from this is that the pi cycle cross of the orange line over the green line is actually very accurate in predicting a peak. So we're here at the moment. The green line here, as you can see, is now turning sideways. And the orange line, as you can see from going down, is now turning back towards the upside. So it looks clear to me from the charts that we're not going to have a peak anytime soon in terms of in the next few weeks. But certainly if the price shoots up very high, then these will move very quickly as well. So we need to keep our eye and focus on this particular chart to help us guide us out of the market at the blow off top. The next exit indicator is the 1458 moving average that I've been showing you for many times in the past. And that basically takes into account the peaks. And wherever the 1458 crosses the previous peak, like for instance this one here, we only started the data here, but if you look at the trajectory of that, where this crosses there was actually where the peak was. And if we move to the next cycle, this was the previous peak to this one here. And if we draw the line there, you can see quite clearly that the 1458 line crosses exactly at the peak of the cross there. So again, based on just two data points, we have to deduce from whatever information we've got available, and that's all we've got to go by. So based on that, it would be reasonable to suggest that this peak here, when this green line here, the 1458 crosses the white line, wherever the price of Bitcoin is at this point will be the peak. So we'll have to see where this line, but the trajectory seems to be going towards November, December, January, February time. So maybe 4 to 6 months time, we're going to get whatever the price is going to be here. So this again is leading to a blow off top in the next 3 to 6 months time. Obviously the RSI is also going to be an exit indicator, because as you can see from the peaks here, when we top off around about this level here, around about the 90 plus mark, we'll know that we're getting very close to a blow off top and to get out of the market. So the RSI is also going to be a very good exit indicator for us, so we must keep an eye on that. One of the other indicators that I like to use is called the Beam Bitcoin indicator. And basically there are 3 zones here. There's the green zone, which I would call the buy zone. They call it the long zone. So this is where you start buying all these points here. And we have the short zone, which is where the peaks are. And clearly we haven't gone into the red zone yet. So we need to look at this indicator. And as soon as we start moving into the red zone, we'll know that we are very, very close to a blow off top. And we need to get the hell out of here. So please keep a note and keep focused on this particular indicator as well. And the final exit indicator I want to look at is the Bitcoin Investor Tool. This is the one here, Bitcoin Investor Tool. As you can see, whenever we get a peak, it's always above the red line here. So this red line is absolutely critical. Look, 2 peaks there and the 3rd peak there. So this is where we are currently at around about the 50,000 mark. And the red line here is currently at $105,000. And as you can see from the peaks are quite well extended above the red there. Similarly here, similarly there. So what we can expect is for the blow off top to be much higher than the $105,000 mark. And if we look at the past history of what it could possibly be, and if we measure this peak at the end of December 2017, once we went past the red line there, from there to the peak was 133.7% to $20,000 here. And if we have a look at the previous peaks, once we went past this level here, past the red line, to the peak was approximately 388%. Similarly, from this peak here, that was 660%. So we've had 660%, 300 and odd percent, 133%. So obviously they're going down in the numbers. If we were to calculate currently from this point here, please remember it's going to take time from where we are here, the current price, to get to the red line, wherever it's going to cross here. And as we make our way up to that level, this red line is going to be moving in a higher trajectory, obviously, as you can see. So depending on when we get to this line here, it could be around this level when we're at 150,000. Currently we're at 105,000 level mark. So if we get to 150, it would be merely going 100% higher to the $300,000 mark. And that would fit in with the consensus of opinion of most technical analysts that we're going to top off around about the $300,000 mark. So let's wait and see, but we need to keep an eye on this. But as you can see, that whenever we come to the averages which are inbuilt to the Bitcoin investor tool, we will have support and resistance. As you can see quite clearly, we've had this in the past. So as we move up the gears towards these averages, we will have corrections along the way before we move and break the red line to the blow off top. The main takeaway from this is that we know that we are just a mere few months away from the blow off top. We've also now looked at the exit indicators to know that we can be prepared that when all those indicators are all confluencing, i.e. they're all saying the same thing at one juncture, then we have to take note. No one indicator is going to be the magic bullet to tell us what's going to happen. So we need to use the confluence of all those factors I've just shown you. And when they all come together, we can be, with a very high degree of certainty and accuracy, know that we are at the top of the bull market and we need to basically lighten our investments. How you do that will be your decision. A quick short-term analysis for the next few days and weeks. I've been giving you these levels for a while now. So if we take the peak in April at 64,000 and bring it down to the 28,800 level there, you can see quite clearly, the reason why I marked these two lines out is that that's the golden pocket level at 61.8 and 65% of the Fibonacci retracement. And that comes to 51,000. So I'm expecting that as soon as we get to the 51,000, between 51 and 52, according to this golden pocket, we're more than likely going to have a correction here. And moving further forward, I've drawn this red line here, this one here, at the 1.61.8. So further up, once we break the 64,000 previous high, and we will have a correction obviously at these points there, but the one after that may well prove to be a larger correction than the smaller ones we're going to have along the way here. Again, because it says 61.8 and Bitcoin, we know, has a very strong affinity to that and respects that very much. So these are the next 2 points I want you to look out for. However, I've also marked on my chart this level here, this green part. If we just go closer in there, the reason why we need to heed to the 57,000 as well, once we get past the 51, 52,000 level here, there will be a correction by the looks of it with a high degree of probability. But we may also get a correction here at these levels at 57,000, simply because if you look left at the charts, there's a clear evidence that a massive resistance here. So as soon as the price came up, look how fast the price came up here. And it topped off at this point So we need to respect that because it had a big dump there. And when we came back up again, it hung around the same levels for quite a while. And then when we did eventually go there, we used it as support here. And we tried another attempt to get past this level. So on 4 occasions, this has proved to be very strong resistance and support. So with a very high degree of probability, based on facts in the charts, we can say that when the price gets to this level here, 57, we're going to have a few fireworks. We just need to be aware of them. And obviously, once we clear the double top here, that's when we're going to go to the 87,000 mark from there on. So the main things to focus on in the next few days and next couple of weeks is firstly the 61.8 and the 65% golden pocket level at 51, 52,000. We could top off around there today or tomorrow. In the next 24 to 48 hours, I'm expecting the price to get up to the 51, 52,000 mark and get a correction there. If you want to know where the correction might well be, well, if you have a close look here, again, I've marked this green line out here, and this is where we're getting a lot of resistance. So old resistance will become support. So what I'm expecting is that if we do have a correction here with a high degree of probability, I think we will, then more than likely we'll come back from the 51, 52 level to retest this level here at 48, 49,000 before we move on to the next level here. So let's wait and see. When we do top out around the 51, 52, then we'll have a look at the Fibonacci retracement from this point here at the bottom to wherever it tops out here on the short term. And then we'll have a look at the levels it will come back down to. But more than likely, this green resistance band here is a natural place to come back to about 47, 48. And there was another level that I showed you last week, which was based on the hash ribbons that I showed you. These hash ribbons caused a little bit of confusion, judging by the comments we got in the last video. I said quite clearly that whenever we've hit the blue buying signal over the last 11 years, and we've had about 11 or 12 of them now, then we've never had a price go below that in the future ever again. And this last blue dot that we got was here at 44,000. If we just have a quick close look at that, we can clear this up. And the only time that it did actually break that record was the blue dot here, which after we got this COVID-19 situation. So obviously, I personally don't count that, but on record it's there. But apart from this one, every one of the blue dots, if you look at them, if you measure them all, you'll see, and I showed them to you last week, we never came to those price levels ever again wherever we had the blue dot. So if we have a look at this part here, at this point, this is the point where it closed at exactly 43,800, this point there. And look, so far, we've had a little wick here. So this blue signal we got was about 3 weeks ago now. And since then, yes, we've wicked down a little bit, but we haven't closed below this line yet. So if we do, then obviously we need to learn from that. But judging by the strength of these candles, it doesn't look as though we're going to come back down below the level again here. So this is going to prove very accurate. And like I say, if we do come below the 44,000 again, then the information we have from that is that this one didn't work. So out of the previous 12, one of them didn't work. So that's what we've got to take away from it. Please remember, no one's got a crystal ball. We can only go by what's in the charts. And so far, this blue signal is playing out exactly as it per its historical record. So this level here that we need to close above in the future is always going to be about 43,800 level. We came very close at 43,800 before bouncing up. So far, so good. Hash ribbons are still the greatest indicator historically that we've got. Just a final thing I want to show you is the MACD. Quite clearly we can see that we've got a bullish cross now coming up with the MACD. And amongst all the other indicators I've been showing you in the last few videos, we are in the midst of a big massive bull run coming up very shortly in the next few months. The MACD is confirming that. The last time we had this bullish cross was over here, there, just before this massive run that we've had here. And before then, it was over here, just after the COVID-19 situation. and this is what we got. And before then was here. So this is a very reliable indicator on the weekly chart. So again, all the pointers are that we're going to have a blow off top in the next few months, and the MACD is suggesting exactly the same. Okay, if we have a look at the XRP on the weekly chart, just to get an overall picture, this is exactly what we've got here. We made a lower high here, while we made a higher high here, causing a divergence which led to this correction that we've had here. Now that's out of the way. We've bounced off this level here, this critical level of 62 cents, and I've drawn this trend line here that so far we've had 1, 2, 3 touches here. And if this was to go in a straight line, that means that the next stop would be around about $4 around here. Obviously, it's not going to go in a straight line. We're going to be moving sideways. So it's more than likely going to be up here, anywhere above the $5, $6 mark there. And you can see with the RSI, just like Bitcoin, it's moving towards the top, towards a peak somewhere around here. That level can be anywhere really, and you can take a guess. My target for XRP in the past has always been around about the $54 mark. Now, that's based on 15 times the previous peak, which was around about $3.60. And to be perfectly honest, nobody has a crystal ball. We can only go by what's in the charts. And the calculation was really based on the fact that with Bitcoin peaking at 20,000 at the end of 2017, and we're expecting a $300,000 peak for Bitcoin this time round, which represents a 15 times its previous peak of 20,000, then 15 times would be a reasonable amount to expect for all the other altcoins, and that's where it's based. And they may prove to be completely pie in the sky, but it's what we've got. It's a calculation we all have to make to give us just a guidance, some sort of a direction of where it could possibly be. So we're just looking at possibilities and probabilities here. But certainly, if you look at this line here, it may well be that we go up here and break this line to go much further. Who knows? But certainly it's aiming in the right direction, and I would be very surprised if XRP doesn't go to at least $10 to $15. But certainly it's looking very good. We can have a look at this neckline that we've created here. And if we go there, we can see quite clearly here, look, we've got a cup and handle forming here. So we've had the cup, and now here's the handle which we've just had with it. So that is a classic bullish pattern, which is telling you that once we pass this level here, this neckline here, which is currently at about $1.75, once we get past this level here, I would expect a rocket ship to the upside here. Where this ends, we don't know. It will all depend on Bitcoin. Always remember, the altcoins are the passengers on the Bitcoin train. Wherever Bitcoin goes, the altcoins will follow. If you want to support the channel, then please click on any of my videos, and then below the videos you'll find a box called Show More, which gives you a description box, and in that description box is the affiliate link with Etoro that I have. So I partner up with Etoro because that's the main exchange I use for all my investments. These are the reasons why I tend to use Etoro. It's a very simple exchange to use in terms of depositing money and withdrawing the money, as well as trading if that's what you want to do, as well as for long-term investing, which is what I tend to do. So if you want to support the channel, please click on the partnership link, and then what you'll do is you'll get this box here, and then you can basically put your username, email and password and just fill in the form there. If you like any of my videos and you find value in them, then please don't forget to like and subscribe to the channel. A quick look at Marathon Digital Holdings here. This is the neckline which we need to be aware of, this one here. As you can see, we had a lot of resistance around here, a lot of support around here, resistance here, and we've just had recently a lot of resistance there. So this is a key line that we need to get above. And if we just zoom in on this part here, I've been saying for many weeks now that this is the neckline here on this resistance lines here. And once we get past this, so we've just now edged above the neckline here. So it looks like we're good to go with this. Looks like the next stop for marathon is going to be at this neckline, which is around about the $54, $55 mark. And once we get past this neckline, then we're good to go to the end of the bull market. The RSI would suggest that we're again aiming for another or one of these peaks here. So whatever that peak gets to, we don't know, but certainly we're expecting a very high price for marathon. Let's wait and see, but certainly if you haven't got marathon and you want to buy marathon, then you can go to the link below each of my videos for Etoro exchange, where you can buy and sell marathon. And please remember, marathon is not on your normal exchanges because it's not classified as a cryptocurrency. It's a Bitcoin miner, and it's on the NASDAQ on the American market. And that opens from Monday to Friday. It's not 24 hours. And Etoro make it available on their exchange. So let's wait and see what happens with this. But certainly we're in the midst of the bull market, which is about to top off in the next 3 to 6 months. If you enjoyed the technical analysis, then please do remember to like and subscribe if you haven't already done so, and to turn on the notification bell so that whenever I do these videos, you're always going to be up to date. The next 4 months are going to be absolutely critical, so I don't want you to miss out on the videos and the updates that I give you. But now it's time for this. There were two frogs who were the best of friends, just like brothers. One was fat and one was thin. Always looking for trouble and adventure, they were messing around the countryside when suddenly they saw a farmer leave a bucket in front of the stable. And due to their curiosity, they went over to see what was in the bucket. Because the bucket was too big, they couldn't see what was inside, so they just jumped in. The bucket was filled with milk, but they couldn't get out as the sides were too slippery. So they just kept swimming around, and they continued swimming because they just couldn't get out. After an hour, the fat frog said to the thin frog, "We've been swimming so long, it's no use paddling anymore. We're just going to drown. We will just die. It's inevitable. We may as well give up. There's no point. No one will come and save us, or we will turn into butterflies and fly away. We are doomed." His friend replied, "Hold on, brother fat frog. Keep paddling. Somebody will get us out eventually. As long as we don't give up, we won't drown and we won't die." So they continued paddling for hours and hours. As the sun started to go down, the fat frog said, "I'm sorry, but I can't go on any longer. There's no sense, because it's obvious we're going to drown. I have given up already." And the fat frog stopped swimming. He gave up and drowned in the milk and died. The skinny frog was devastated, and despite his efforts to persuade his friend to keep going, he lost his best friend. More determined than ever, he started paddling even faster and faster to numb the pain of losing his best friend. Suddenly, around midnight, he noticed that he had turned the milk into butter because he had been paddling so long, and he was able to jump out of the bucket. He screamed with excitement and jumped out and back into the woods. He was alive and excited, but was also very sad because he'd lost his best friend. Once his best friend had decided to give up, he was doomed. You see, in life, we never lose as long as we don't give up. Years later, he married a frog lady and had lots of frog children. He named them all after his fat frog friend to keep his memory alive, and because he missed him so much. Every night, he would tell his frog children the story of the fat frog who gave up, to teach them to never give up. You see, life is hard, but you have to be harder and smarter. Always be grateful for what you have and never ever give up, because as long as you never give up, you can't lose. Okay, so we'll leave it there. Thank you once again for watching. Very much appreciated. And if you found value in the technical analysis and the wisdom bite, then please do remember to like and subscribe and to turn on the notification bell. If you want to leave any comments, questions or suggestions, then please leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.